May mortgage loan delinquencies increase the most among all credit products. Early stage delinquencies rise across most VantageScore credit tiers. Average credit balances are reaching new highs. I'm Jeff Richardson, host of Credit Gauge Live, and I'm joined as always by our lead analysts Susan Fay and Atif Mirza. We're going to dig into all of the credit trends you need to know. Atif, first question to you. What does the May 2025 Credit Gauge tell us generally about consumer credit health?
Thank you, Jeff. So overall, consumer credit is quite healthy. Average VantageScore credit score is held steady at 702, which is a solid sign. However, we do starting to see some sign of stress, especially in mortgage sector. In May 2025, mortgage delinquencies rose more than expected. This is especially notable because most consumers, borrowers, they prioritize mortgage payments over others. And we saw the biggest year-over-year increase in early stage 30 to 59 day past due delinquencies. It's something to keep an eye on. When people start falling behind on their mortgage payments, it signals that there is stress building up in that sector.
Thanks, Atif. Next question to you, Susan. How are consumers handling their credit balances?
So in May, we saw average balances reach new highs. Overall, the average credit balance in May was $106,000. This is an increase of approximately $250 from the prior month, and it's up about $1,500 from this time last year. And so it's not only are they balances rising, this is the fifth consecutive month that we've seen balances reach 5-year highs. In the mortgage, when you look at the underlying products that make up the total, what we're seeing is the largest increase in balances was in mortgage. And so year over year, mortgages are up 2.8%. This is definitely something that we'll be keeping an eye on in the coming months.
Thank you, Susan. Atif, next question to you. Lenders care deeply about delinquency trends. What are you seeing in terms of delinquencies by credit tier?
Yes, we saw credit delinquencies rose in most credit tiers, especially in 30 to 59 day past due, not just in near prime and prime consumer credit segments. We saw in super prime as well, credit delinquency rose year over year. This is a signal that the financial stress is rising in the low risk credit tiers as well. Subprime segment, we saw some improvement in credit delinquencies year over year. However, they continue to stay elevated.
Thank you, Atif. Thank you, Susan. So some trends to certainly keep an eye on. You can always do that on your own at VantageScore.com by using the Credit Gauge tool. But in the meantime, we'll be right back with our special guest this month, Tony Hutchinson, who is Executive Vice President and Head of Public Affairs at VantageScore. Tony is our mortgage expert. We saw some delinquencies rise. We'll dig into that trend with Tony and others. So stick around and we'll be right back. Welcome back to Credit Gauge Live. I am so pleased to be joined by my good friend and colleague, Tony Hutchinson. Tony is Executive Vice President and Head of Public Affairs here at VantageScore. Tony is actually an alum of both Fannie Mae and Freddie Mac, and so he has deep industry experience in the mortgage market. So I can't think of anybody better to help us explain why delinquencies are on the uptick. So Tony, we talked a little bit about delinquencies in the earlier segment. Can you help shed some light on why we're seeing an increase in delinquencies in the mortgage market?
Yeah, there are three reasons for this. One, inflation. So the cost of all goods is going through the roof. Two, inflation in terms of home prices. So a product that was on the market that cost maybe $300,000 a year ago is substantially more than that right now, and that's putting pressure on the consumer. And then the third thing is we're still using outdated credit scoring models in the mortgage market. We're using a product that has been developed 20 plus years ago, if not more than that, and the economy and the consumer has greatly changed.
What role do scores play in a mortgage application, and how does VantageScore fit in there?
Yep. At origination, a credit score helps a mortgage lender determine if you are eligible for a mortgage product. That's the first thing that the mortgage originator does. He pulls your score and determines, can you get an FHA loan? Can you get a conventional conforming loan or a loan that is held by Fannie Mae and Freddie Mac? That is literally the first thing that they do. So if you have a score, and it's a good score, then you're going to get the best priced mortgage on the market. The key is the score that is used right now is very old. And again, it's based on economics from 20, 30 plus years ago. The economy and the consumer has greatly changed. So you need to bring in more information. VantageScore 4.0 brings in a significant amount of information that can help both the originator and the consumer effectively determine what they can afford.
And so that's why lenders need to be moving towards VantageScore 4.0. It's more predictive, it's more inclusive. Want to just mention a New York Times article that recently came out. There was a study from the Urban Institute that looked at the power of rent and cited VantageScore in particular as having the ability to use rent payments. Can you shed some light on that?
Yes. So rent is probably one of the biggest predictors of whether a consumer can purchase a mortgage. Right now, you have rent payments that are equivalent to mortgage payments throughout the country. So if you can make your rent payment, then you should get some credit for that and go out and make a mortgage payment. The Urban Institute study found just that folks who submitted their rent payments into a credit reporting system were able to then qualify for mortgages, and it was a better predictor of whether or not they could afford that mortgage.
And VantageScore's always included rent payments when it's in the file, so another reason the mortgage industry needs to adopt VantageScore 4.0. So Tony, really appreciate you being here in person in New York City. As always, you can go to VantageScore.com to use the tool yourself. And until next month, we're signing off. Thank you for watching Credit Gauge Live.